What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay guys, Jay Martin here, CEO of Cambridge House, and I'm joined right now for the first time by Will Rhind, the founder and CEO of GraniteShares. Will, how are you?
I'm good, thanks, Jay. How are you?
I'm really good. And I'm excited to jump into a bucket of topics with you. So thanks for making the time and coming on the show and getting in front of my audience. Since this is your first time on, for anybody who's not familiar with GraniteShares and what you do, give us the 30-second commercial. How do you spend your time?
Yeah, sure. So GraniteShares, we're a investment manager, so manage money for a business. We specialize in a type of product called an exchange-traded fund, or ETF. Some of you listening, I'm sure, will be very, very familiar with what that is. Others maybe less so. But ETFs is our business. We focus on three different things. We have real assets, income, and long-term or capital growth strategies. The main business is here in the United States. I'm actually in New York City right now. And we have a European business as well. But that's us, headquartered here, about 1.7 billion under management.
Right. And your focus, as far as I know, is largely gold and the commodity sector. And so what's catching your eye right now, Will? What should investors be paying attention to?
Well, I think the biggest thing in terms of, what we get asked and, what we're getting hit up for in terms of information on a seemingly daily basis now is inflation. People are really worried about inflation and they want to know what to do about it. And this is obviously somewhat unusual scenario to be in because we haven't had inflation for a long, long time, at least officially speaking, by the CPI benchmarks. So this is something that has happened really within the last few months, I'd say. And as people really try and get their head around, what does it mean? Are we going to have transitory inflation? Is it something that's more serious, more permanent? And, what do I do about it? How do I get some kind of hedge? How do I, protect myself, protect my portfolio? And so we're getting a lot of inquiries on that front.
So what are your thoughts when you get hit with that question? Is this permanent? Is this short term? What goes through your mind?
Yeah, so I'm a believer in that there's been inflation, and I also use the word rampant inflation in certain sectors or certain parts of the economy for quite some time. And that's in the United States, obviously, that's sectors such as real estate, that's such as healthcare. There has been inflation, and obviously the biggest one that's manifested itself probably in front of everybody's eyes is asset price inflation more broadly, or the stock market.
Yeah.
Now, when we talk about official CPI or consumer price index inflation, it's not so clear as to some of these numbers and how they translate into that particular sort of official index. However, that being said, now there's no escaping the fact that since the bottom of last year, the market bottom, obviously, we've got rising commodity prices across the board in a way that we just haven't seen probably since the early 2000s. But, oil prices rising, gasoline prices rising, that's causing, gas prices at the pump to rise, which is, something that people are very switched on to. Food prices rising because agricultural commodity prices are rising. And then we have sectors that people don't normally think or probably give too much attention to, like lumber, that are at all-time highs. And so we have shortages kind of across the spectrum here that are leading to these price rises. And obviously the natural reaction to that, as you pointed out, Jay, is, okay, well, that's surely a short-term effect because this is all about the recovery from the pandemic. And of course, there's going to be a bounce in commodity prices as the global economy reopens. Sure. Mm-hmm. But I think the bigger thing is that this is not just about a rebound from the pandemic lows. Of course, that is the case for some commodities. But I think what's really going on here, Jay, is we're transitioning to a completely new global energy infrastructure. So we're moving from a hydrocarbon world, which we're in today, and we're moving to a sustainable green energy, renewable energy future. And that will mean, to my mind, a sort of sustained bull market, a commodity supercycle, if you will, for any commodity that is a key component or key ingredient in that transition, in that story.
Right. And so you're obviously pointing to copper, probably nickel, maybe some of the rare earths like lithium, cobalt, graphite. Where do you think the most sustainable opportunity lies right now?
Yeah, I mean, I think that across the board, you're seeing any material that is involved in that transition, and I think it's not just about just the metals you're talking about. You're also seeing big rallies in things like uranium, for the nuclear power side of things, which people haven't shown really much interest in or any interest in for a long time.
Yeah.
But I think there's a number of commodities to me that at the moment, platinum's one that I keep an eye on. Obviously, in full disclosure, we have a platinum ETF, but I keep an eye on that because I looked at what's happening with lithium and think that platinum could be a new lithium. And the reason for that is because you need platinum to produce green hydrogen. So in the production of green hydrogen itself, which is a big thing, and the actual hydrogen fuel cells themselves. So platinum is used as a catalyst in the fuel cells. So needed both on the production side and in the fuel cells. And that's something that I think if we see demand for hydrogen in the same way that we've seen demand for batteries and the effect that that's had on lithium and some of the other battery metals, platinum's something that could well be one to watch out for in the future.
That's interesting. I actually didn't know that. And I was curious because I knew you're a platinum bull. And if you look back at historic platinum runs, they've been on the back of mainly catalytic converters, right? As a driving force.
That's exactly right. Exactly right. So right now, both platinum and palladium, their primary use or the biggest source of demand is in catalytic converters. So the device on your car that cleans the emissions from the engine. Yeah. And the breakdown is roughly that palladium is used typically in gasoline engines, and platinum is used for the diesel engines. And so you've had a decline in the diesel market share really ever since the Volkswagen scandal a number of years ago, the so-called Dieselgate. And so the price of palladium, not just on the back of increased market share for gasoline vehicles, but because of a severe shortage in that market, has recently gone to all-time highs, just over $3,000 an ounce. So the price of platinum at about $1,200, $1,300 an ounce, where it sits today, is trading at a big low compared to the palladium price, and they're substitutable one for one in the catalytic converters. So we think that short term there could be some substitution effect, but longer term, like I said, you need platinum for the production of green hydrogen and for the hydrogen fuel cells, which I think is going to be a big part of the green economy going forward.
Okay. Now you touched on uranium quickly there. I'd love to revisit that. I didn't mention it, but you're absolutely right. It's like the unsung hero of the renewable energy space. And I think for understandable reasons, it's also been the black sheep, right? For the last 10, 15 years. And the barrier to uranium and nuclear adoption isn't technology. It's not capital. It's political, right? And for whatever reason, we still point to Fukushima was more recent and it was a big disaster. I think the media made that into far bigger of a disaster than it actually was. But we still even point to Chernobyl, which was in the 80s, yet we're still pointing the finger at that as if that's still how we do business in the nuclear industry. So first of all, do you think I'm on the money there? Well, and if I am, what's with the sentiment, the negative sentiment towards the nuclear sector? And do you think we're getting past that?
Well, let's start with the last point. I don't think we're getting past that just yet, but I think there's a growing acceptance, and particularly in some of the, I'd say, some of the more vocal parts of the sort of the climate lobby, that if we really want sustainable future, then nuclear has to be a part of the solution. Now, I'm not saying it is the total solution, but I think it has to be part of the solution. And you're right. I mean, it's been something that has been very controversial kind of over the last sort of few decades. I think that's largely because there were projects that were done at scale, typically under complete state ownership or sort of quasi-state ownership, and there's been again a lack of investment in the space, a lack of technology, if you will, in terms of moving that forward, because there's been public opinion that has been frankly scared of some of these incidents that have occurred. Now, all that being said, there is now more technology in that space, and for the first time, it seems like certainly smaller nuclear reactors, these so-called micro reactors, things like that are starting to become a real viable option, especially because they use spent nuclear fuel that already is in existence. So that seems like a good solution. However, I think we've still got some way to go before that gets sort of rolled out in terms of anything of significance.
Okay. Now, I don't want to make the assumption that because you're such a commodities bull, you're maybe a bear in the broad equities market. So you tell me, what's your sentiment right now when it comes to broad equities?
So my sentiment's positive on broad equities. I mean, the one thing we know about the market, particularly the intervention of central banks, is that there's that mantra, don't fight the Fed. And I think that's something that since you've had heavy intervention, ever since the financial crisis, that has led to increases in asset prices across the board, but most notably in the stock market. So while we're in an environment of extreme monetary easing and money printing, I wouldn't be betting against the stock market at this point in time. However, all these things have to come to an end at some point. But my sort of broad thesis is that the market will continue to go up. I think still there's going to be the tailwinds, obviously, of the global economy kind of reopening can last for some time. If you think back to the Spanish flu, which a lot of people talk about in terms of the last known global pandemic, that after the Spanish flu came the Roaring Twenties, which was a period of economic prosperity that obviously ultimately ended up in war. But the period of economic prosperity that followed the pandemic, maybe we're in for something similar. Certainly some of the early signs are that there's a lot of pent-up demand for certainly activities, services, products, experiences that were curtailed during the pandemic. And so people looking to spend money, looking to sort of get back to maybe living life day by day. And so from that perspective, I think there's going to be more consumption, and obviously consumption is the main thing that drives the US economy. So I think we've got some road to run here.
Yeah, I'm with you. It's funny trying to strike that balance in my forecast between the pent up demand, those that want to get back on an airplane, get back overseas, travel, be out again, and those that have adopted quarantine life way better than they thought they would. And I kind of find myself with a foot in each camp. I have vacated my office in downtown Vancouver. My whole team is remote. I love working from home. I can't really imagine paying what I used to pay for a downtown office space again. It doesn't make sense to me. Having said that, I miss traveling so much. And we just shared before I hit record, I'm getting on an airplane soon here and I can't wait. And so I find myself, I'm probably going to keep some of this, right? Like I'm probably going to keep the work from home. I've built an amazing home gym this year, right? My garden is phenomenal, all this stuff, right? The house is the castle now. And I like that. But I'm looking forward to getting out and living again. So trying to find that balance, so therefore, what kind of a vaccine-led recovery could we expect? How many people are enjoying the sort of the huddle and they're not going to give it up? And how many are pretty excited to scream at the door as soon as possible? Where do you land, Will?
Well, I mean, I think, what happened is I think a good explanation you just made, which is that ultimately for me, and I think for a lot of people that work certainly in my business, it was about flexibility. It was really, and I suppose maybe breaking some habits, breaking some taboos that, long-standingly you had to work, come into a commute, work a day job during the office, whatever hours you worked. And pretty much you had your 2 weeks or whatever vacation time a year, and so it was all fairly rigid. And certainly for our industry, it was never about the technology. The technology was there, has been there for some time for people to work from home. It was much more, I think, just a sort of a cultural norm, maybe.
Totally.
That people were just sort of in this cycle of just getting up, going commuting, however long that took, going to work, coming home in the evening. And it was a break from that. And I think a lot of people, myself included, obviously, we're able to sort of take a step back and say, okay, well, do we really need to be doing this, on a daily basis? Is really what we need to be doing? Is this how you want to run your life going forward? And so I think from that perspective, I've definitely taken some of that to heart, and we'll be making some changes regarding the flexibility. But I have to say, I'm back in the office, and I was back in the office pretty early, and that's because at the end of the day, I like that separation. I like coming into an office. I like the sort of the culture of being in an office. I like that separation between home and work. But I think going forward, like you say, you probably to try and take the best of both worlds, which is still have your office, but maintain that flexibility that perhaps you didn't have before. Right.
And I don't mean to sound insensitive. I know how fortunate I am to have a home that's conducive to a work from home environment. And I have team members that if you're, you live with your spouse and you have a dog and you're in a 1-bedroom apartment, working from home doesn't make a ton of sense. And so we'll try to find some medium there. And there's benefits, right, to getting back out on the street again. I ran a conference business, and I still have a conference business. Up until March of 2020, we had events all over North America, right, and sort of large scale trade shows, right. And I miss that business, but not for the reasons that I thought I would. Like, we were very trade show centric, big speaker halls and amazing content. But what I miss is the after hours, and not like not the red light district after hours. I mean, like the cocktails, like the networking that occurs. Like, that's why you go to those events. You don't go for the trade show. The trade show is it's what brings the companies in and the speakers in and all of this. But it's the coffees, it's the lunches, it's the breakfast, it's the dinners, it's the parties. Like, that's where the value is in those events, right?
Yeah.
And that's the reason when COVID came and shut down my conference business, albeit temporarily, we didn't rush into virtual trade shows, because I was like, you can't keep any of the benefits. You can do a virtual trade show, but you don't get any of the good stuff. So why would you do that? It's like you took the worst part of the event, digitize that, and you get rid of everything else. Like, I'm not going to go to that.
You didn't go in for the Zoom happy hours?
I haven't adopted them. Well, I haven't yet. Yeah,
too many of those. I think that's one good thing to say goodbye to after the pandemic.
100%. Hats off to our creativity, though, for those that really got after it and got creative with the Zoom cocktails and all that stuff. Okay, look. So we touched on uranium, bit on the renewable space. We touched on your inflation sentiment. So I think your biggest ETF is your gold ETF. Is that correct?
Yeah, that's correct. Yeah.
Okay. And any thoughts, Will, on where we on in the gold market? I think we had a real hot 2020 and then a very quiet beginning of 2021, and things are beginning to heat up again now. So what are you seeing out there in the gold sector that's catching your attention?
Yeah. So to me, what's going on here is we're transitioning from the phase that we were very much in the first half of last year, and that was gold as a crisis hedge. And so in the early part of 2020, we had an environment where the world was falling apart, and nobody knew what was going on and whether we'd still have a stock market in 6 months' time. And so people were panic buying gold on the basis of it being a pure hedge against crisis. And so that was enough, that flow of metal, that sort of excitement was enough to drive gold up to all-time highs. Once we started to see light at the end of the tunnel from a pure investment perspective, and then that ultimately resulted in the rumors of a vaccine, which became actual news of a vaccine. The need for gold as a crisis hedge dissipated, and that was kind of the story of the back end of 2020, and to a lesser extent the beginning of 2021. And so to me, it's a transitionary phase between gold's need in the portfolio as a crisis hedge to now gold's need in the portfolio as an inflation hedge. And so at the moment, obviously, what we've been doing, particularly over the last few months, is we've been slowly climbing back up again, because I think people were not so worried about inflation a few months ago and thought that the market was going to come back, and just like it did in other cycles that we've experienced before, particularly after 2008, that you could have a lot of money printing, the market come back, and you still don't get inflation. However, this time around, what's different is that we have every single indicator, pretty much inflation indicator, ticking up. You have a huge amount of companies talking about inflation on earnings calls, and you have inflation in all sorts of parts of the economy. So now we tested the high 1600s a couple of times. So we got down to the kind of 1680, 1690. We went there a couple of times, but we didn't go lower than that. And so we went back into 1700, and then we went through 1700. We're now in the 1800s. And I think what we're doing here is building some momentum around this particular, transition phase, as I keep calling it, of gold as an inflation hedge. And I think now the more people that get worried about inflation, yes, of course, they're going to go out and buy commodities, but they're also going to buy gold. And if inflation starts to get out of control, then we're going to see a lot of gold buying.
Yeah, that's great. I like that outlook, and it makes a lot of sense to me. It makes a lot of sense to my audience, who I know because they've been sending me messages over the last 6 months saying, were we wrong? What's going on, right? What are we missing here in the picture? Is Bitcoin stealing the spotlight? What's occurring here? Why is gold suffering? You got this environment, the macro setup stronger than it's ever been in my career, yet gold hadn't been responding in, sure, a very short time period if you look at the bigger picture. So I appreciate your outlook and your perspective on that, Will. Okay, last question for you. Have to ask because of our times. Bitcoin, Will, 10 years down the road, is it relevant? And if so, any thoughts on how?
Well, I think the easy answer to that is yes, it's relevant. It's absolutely incredible to me, how this has happened so quickly in terms of so much value has been built in not just Bitcoin, but all these other cryptocurrencies so quickly. And I think you have to say that this is something that is here to stay. And it's not just about the coins, because the coins are definitely the thing right now that captures all the attention. But there's a monumental amount of money being invested in this sector behind the scenes from venture capital, from private equity. So all sorts of different businesses that are trying to exploit different parts of the value chain here. And obviously everything from the blockchain itself and the technologies around the blockchain to the coins, which obviously get a lot of the media attention, particularly if they go up incredible amount or down incredible amount. So I definitely think it's here to stay. I think that this is something that is in the kind of early stages of how money evolves and a lot of the payments technologies around money. But yeah, something that I think is here to stay and will be around for a long time. Okay, I love it. I'm with you. Will, thanks for your time. I appreciate you coming on and getting you in front of my audience. Thanks, Jay. Thank you so much for having me. It's been an absolute pleasure.
As always, if you enjoy this content, please hit subscribe. I'd love to have you on the team. And if you want to take the next step and go a bit deeper with my content, I publish a free weekly newsletter every Friday where I debrief my portfolio. I distill the top lessons I've uncovered from the guests I've had on this show every week. And I talk about sectors and industries that I think are poised to move, areas that I'm looking for opportunity, and places that I'm allocating capital. I love writing it. We publish every Friday. The link is right beneath this video. Love to have you join the tribe.